morning, class. So this morning we're going to answer some problems in the book, chapter 32, that is depletion. So open your book at page 811. Let's answer 32-7. So again, that is 32-7. So in problem 32-7, the question is, what amount should be reported as depletion for the current year? So again, the cost of our wasting asset is the rate, if you can still remember with our discussion. So now, and then the depletion rate, we are going to compute that the depletion is equal to our depletable amount over estimated extraction multiplied by the extraction per year. So that is our depletable amount. So in this problem, we have an acquisition costs. So we have an acquisition cost of 26,400,000. Then we don't have any restoration costs, but we have development costs in amount of 3,600,000. And then, I forgot, we have restoration costs rather in amount of 1,800,000. And then we have no exploration costs incurred. So the total cost of our wasting asset is 31,800,000. So that is the cost of our wasting asset. However, there is a residual value given. So we have 3 million as residual value. So our depletable amount now is 28,800,000. So that is our depletable amount. So if we are going to divide it with the estimated extraction, so our estimated extraction is, we have how tons. So we have 1,200,000 tons, correct, as given in the problem. So with this, we can get our depletion rate. So we have 28,800,000 divided by 1,200,000 tons. So we have 24 pesos, our depletable rate. But now, since the question is for the current year, so that is this year. So the entity incurred, or the entity extracted, a total of how much? 80,000 tons. So we extracted 80,000 tons. So it's just 80,000 multiplied by the depletable rate, which is 24, and we have 1,920,000. So that is our depletable, or the depletion to be reported for the current year. So the answer is letter A. Okay, now let's proceed to another problem. Look into 32-11. So problem 32-11. So in problem 32-11, we have two questions. The depletion for 2019, and what is the depreciation of the equipment for 2019 as well. So again, in computing the depletion, we just follow the formula of getting the depletable rate, or the depletion rate. So again, we are going to get the costs of the asset, wasting asset. So let's identify this if these are present. So we have here again, a purchase price of 14 million. And then, do we have another cost? Restoration costs? No. Development costs? We have still no development cost. And exploration cost? Still no exploration cost. So the cost of our raising asset is only 14 million. So there is a residual value in amount of 2 million. We have this 2 million. So we only have 12 million as our depletable amount. Again, we are going to divide this 12 million to the estimated reserves that we are going to extract. We have 1.5 million. So our depletion rate is 8 pesos. So how many tons did we extract this year? So we extracted 25,000 tons per month. Again, that is 25,000 tons per month. So remember that this is just July 1, 2019. So that is 6 months to December 31, 2019. So if that is 6 months, so we have 25,000 times 6 months. We can get how much? 150,000 tons. So if that is 150,000 tons, we just simply multiply it by 8 pesos. 150,000 tons. So we can get how much? We have 1,200,000. So that is our depletion for 2019. So the answer is letter A. However, we still have the same question. We still have another question, rather. The identification of how much would be our depreciation. So again, we have this equipment. How much depreciation is in relation to the equipment? So we have the PPE here in amount of 8 million. The question here is, what useful life are we going to use? So in our previous discussion, we are going to identify if this PPE has future use or no future use. So in the problem, it is no stated that it has future use. So it is to be assumed that it has no future use. So if no future use, we are going to identify the useful life of wasting asset or the useful life of the PPE, whichever is shorter. So if the useful life of the wasting asset is shorter, we are going to use output method. So if useful life of the PPE is shorter, then we are going to use the straight line method or STL method. So we are going to use that. So here, which the shorter is the useful life of the equipment. So shorter is the useful life of the PPE, which is 4 years. So now we are going to divide this by 4 so that we can get the depreciation. However, again, this is just for 12 months, 6 months. So we are going to multiply this times 6 divided by 12. So we get how much? We have 1 million as our depreciation. So the answer is letter C for question number 2. Now class, let's proceed to another chapter, chapter 33, which is the topic for revaluation. So now we go to 33-10. 33-10. So in problem 33-10, we have 4 questions that we need to answer. First question is about journal entry. So what is to be included in the journal entry in recording our revaluation in December 31, 2019, the depreciation for the year 2019, then another question for our depreciation for the year 2020, and the balance of a revaluation surplus on December 31, 2020. So that is our question. So we have this data from clandestine company. So again, this is June 30, so half of a year. So in getting the revaluation, we have these costs, the replacement costs, and then the appreciation. So we have here given at costs of a PPE is 5 million and a depreciation of 1.5 million. So in June 30, 2019, we have a carrying amount of 3.5 million. So again, this is June 30, 2019. So the revaluation happened in December 31, 2019. So we are going to get the carrying amount of the PPE at cost on December 31, 2019. So again, the 3.5 million is on June 30, 2019. So we are going to compute the depreciation for the 6 months from July 1 to December 31, 2019, where a revaluation happened. So here we have again the cost of our PPE is 5 million. Then we have its useful life, which is 10 years. So we have an annual depreciation of 500,000 times 6 divided by 12. So in that year or that month, we have 250,000 depreciation. So we are going to deduct 250,000 here, depreciation, and then we can get the 3,250,000 as our costs in December 31, 2019. So if we are going to compute the accumulated depreciation for that, so we have 1.5 plus 250,000. So our accumulated depreciation is 1,750,000. That is our accumulated depreciation, and meaning we depreciated our asset of at least 35% already. So this is 35% already of our 35% of it has been depreciated 35%. So meaning here this is 65%. So here we have on our revaluation date, we have 450,000. So meaning this 450,000 is the sound value. So the sound value. So we have here 550,000. So in getting the depreciation of 4,550,000, so this is a what do we call this? So that we can get the revaluation surplus. So our revaluation surplus here is just a difference of 2. We have 1.3 million. So that is a revaluation surplus. However, the question number 1 is what is to be included in the journal entry to record the revaluation on December 31. So we need to get how much is the replacement costs and how much is the accumulated depreciation in the replacement costs. So here we get the replacement costs by dividing 4,550,000 to 65%, because this is 65% of the total amount. So we have here that is 7 million, and then 35% of 7 million we have 2.450,000. So then we get the 4,550,000, and then we can now get the appreciation. So we have here 2 million, and here we have 2,450 minus 1,750, so we have 700,000 as our appreciation. So if we are going to journalize this one, since this is to be journalized, so we are going to debit PPE or the machinery. So we have debit PPE amounted to the how much is the the appreciation at cost. We have 2 million, and then credit to accumulated depreciation, which is 700,000, and another credit to revaluation surplus, which is 1.3 million. So this journal entry here uses proportionate approach, or proportionate, because we proportion our appreciation with the revaluation surplus and then the accumulated depreciation. So here for answer number 1, the answer is letter C. We are going to credit accumulated depreciation of 700,000. Now, let's proceed to question number 2. Let's erase this so that we have much space. So in question number 2, the question number 2 is for depreciation. So again, this is 33-10. Depreciation for 2019. So that is the question number 2. So again, for depreciation for 2019, so just simply 5 million divided by the 10 years. That is the cost under the 10 years. So we have 500,000 as our depreciation for 2019. So the answer is letter A. So for the next question is depreciation for 2020. So our depreciation for 2020, so we have here the costs or the sound value of our equipment, because it has been revalued on December 31. So the new sound value is 4,550,000. So since it has already been, the remaining useful life is 5 years, so we're just going to divide this by 5, and we get the new depreciation of 910,000. So that's it. So the answer is letter A. Again, we use 4,550,000 because this is the new revalued amount or the sound value of our equipment, the replacement costs, and the replacement costs, and then the remaining useful life of the PPE is 5 years. So that is our new depreciation. And the last question is the revaluation surplus for 2020. So just a recap again, our revaluation, we recorded a revaluation of how much? We have revaluation surplus of 1.3 million or 1,300,000. And the valuation surplus is to be amortized over the remaining useful life of the asset. So here we have the remaining useful life of the asset of 5 years. So yearly, we are going to amortize this by 260,000. So This 260,000 is to be deducted on the 1,300,000. So we have 1.3 million minus 260,000. So we get the amount of 1,040,000. So this is our balance of the revaluation surplus in December 31, 2020. After 1 year, it has been revalued. So 1,040,000. So the answer is letter B. Okay, now let's proceed to another problem. Chapter 34. So let us now proceed to chapter 34, that is impairment of an asset. So let's answer 34, 34-10. So again, let's answer 34-10. So 34-10 has three questions: the impairment loss for 2019, the gain on reversal of impairment for 2020, and the depreciation for 2020. So I choose this problem because there is a gain on reversal, so that I can show you how to treat the gain on reversal according to past 36. So again, we have this data from Elite Company. So Elite Company purchased the equipment of on January 1, 2019, a cost of 11 million. Useful life is 10 years. And then uses straight line method of depreciation. So every year, the entity determine the impairment indicators. So we have here data of fair value less cost of disposal in December 31. We have fair value less cost to sell. We have 2019 and 2020. So in 2019, we have 8.1 million. Then on 2020, we have 8.4 million. And then the value in use, we have 8.55 million. And then we have 8.2 million. So these are the data. So now for question 1, what is the impairment loss for 2019? So 2019, that is here. That is 2019. So we just look into the 2019. Again, according to past 36, the replacement cost, or the recoverable amount rather, the recoverable amount is either fair value less cost to sell or value in use, whichever is higher. So in this case, value in use is higher. So we are going to use that as our recoverable amount. So again, in computing impairment loss, we have the carrying amount minus recoverable amount equals the impairment loss. So we have already recoverable amount in amount of 855 million, or 8,550,000. So that is our recoverable amount. However, the carrying amount is, we are going to compute it. So the computation of the carrying amount is, we have 11 million, since that is 10 years, so divided by 10 so that we can get the depreciation. And then the depreciation would be how much? We have 1 million, 1.1 million. So since 1 year had passed already from January 1, 2019 to December 31, 2019, we just simply deduct this to 11 million. So our carrying amount would be 9 million, or 9.9 million. So we have carrying amount and what do we call this? Replacement costs or replacement amount. So our impairment loss in 2019 would be just 1,350,000. That is our impairment loss. So that is letter A. So now let's proceed to letter B. Letter B. Number 2 question. So we have number 2 question. The number 2 question is the gain on reversal of impairment for 2020. So gain on reversal. Again, when there is an increase of the recoverable amount, so according to past 36, the increased carrying amount of an asset due to the reversal of an impairment loss shall not exceed the carrying amount that would have been determined as if there has no impairment loss been recognized. So here, because of that rule, we are going to compute the carrying amount of an asset with impairment and without impairment, and we are going to compare which are going to use as our carrying amount, the new carrying amount. So we have here with impairment, and then without impairment. So let's compute the carrying amount as if there is with impairment or without impairment. So again, our carrying amount, if that is with impairment, so we have here the 800 or 8,050,000. So that is the carrying amount. So divided by 9, since this is 9 years, so we have the depreciation of 950,000. 9 years because 1 year had already passed. So we have 950,000. We are going to deduct 950,000 to 850, so we can get the carrying amount on December 30 of 7.6 million. So that is the carrying amount if that is with impairment. So, however, we are still going to compute it again as if without impairment that happened. So we have here 11 years, or that 11 million rather. The carrying amount is 11 million. So our annual depreciation, if you still remember, we have 1.1 million per year. So 2 years have passed already. So times 2. So we have now a depreciation of 2.2 million. And our carrying amount is 8.8 million. So again, the rule is the increased carrying amount of an asset due to the reversal of impairment loss shall not exceed the carrying amount that would have been determined as if there has no impairment. So meaning this is the ceiling, the 8.8 million. So if 7.6 million is higher than 8.8 million, we are going to use 8.8 million because should not exceed 8.8 million. However, in this case, 7.6 million is lower than 8.8 million. So we are still going to use the 7.6 million as our base of a carrying amount. So back to the basic formula of getting the impairment loss. So we have here the carrying amount, the recoverable amount, and then a total of the impairment loss. So in this case, the recoverable amount is whichever is higher again of here. So the highest or the higher is fair value less cost to sell, which is the 8.4 million. And then again, we are going to use the 7.6 million as our carrying amount because this is lower than 8.8 million. So kay dapat man gud daw dili mo exceed og 8.8 million or dili mo exceed nga sa as if wala siya impairment na hitabo. So since here mas dako man ang ato ang recoverable amount kaysa carrying amount, so we have a gain on reversal of how much? We have 800,000. So this is gain on reversal, not impairment loss, because higher is the recoverable amount compared to the carrying amount. So in problem number 2, we have answer of letter B. So that is our gain on reversal. And last problem is the depreciation for 2021. So the depreciation for 2021 is, of course, the new carrying amount. So how much is our new carrying amount? Our new carrying amount is the 8.4 million, which is here, the new recoverable amount being identified. So divided by how many years already had passed? So 2 years, diba? So we have divided by 8, then we can get the depreciation of 1,050,000 or 1,050,000. So that is letter A. So we are going to answer last problem, that is impairment of an asset in relation to CGU or cash generating unit. So let's answer 35-8. So this is an impairment with or in connection with a goodwill of a cash generating unit. So we have here gold company acquired another entity in a form of business combination. And when we acquired a company in a form of business combination, that is goodwill will arise. So we have here 3 reporting units. We have the retailing, we have the service, we have the financing. And we have these 3 questions. What impairment of goodwill attributable to retailing unit? What impairment of goodwill attributable to service unit? And what is the impairment of goodwill attributable to financing unit? So we have here the, what do we call this? Amount of goodwill. Amount of goodwill. So in retailing we have 300,000, in financing we have 200,000, and then in financing we have 200,000. In service we have 200,000. So the entity computed the implied value of the goodwill of 3 major units at year end. So this is now the implied value. So when we say implied value, the value of our goodwill at the end of the year. So for the retailing we have 250,000, for the service we have 100,000, and for the financing we have 600,000. So let's just get the difference. So here for the difference, so for the retailing we have 250,000. The difference here signifies the impairment loss. Why? Because from the original cost of our goodwill here, after a year, their implied value is this one. So meaning, this is the carrying amount of our goodwill, and now this is the recoverable amount of our goodwill. Under these 3, reporting units of the acquiree. So from 300, it now becomes 250. So meaning there is the carrying amount is higher than a recoverable amount. Then we have from 200, it becomes 100,000. So the carrying amount is higher than the recoverable amount. And then for the financing, 400,000 to 600,000. So obviously, when are we going to have our impairment? If carrying amount is higher than recoverable amount. If that is lower, no impairment. So do you still remember the diagram I showed you when we put X or check whether it is impaired or not? So here there is no impairment because the recoverable amount is higher than the carrying amount, or the carrying amount is lower than the recoverable amount. So total impairment is 150,000. So for question 1 is for the retailing. So we have 50,000, that is letter C. For question 2, service unit, that is letter B. And for the last question, financing. So since the goodwill of the financing is not impaired, so 0. So that is letter 50.